Is everywhere. Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Thursday, the 15th of November. When you read about it, it's too late. And what I mean by that, if all we've been hearing lately is the Fiscal Cliff, it's become an obsession with the financial press. And the reality is, long before this became news, the markets were telling you in no uncertain terms that things weren't altogether rosy for the economy. You know, over a month before the election, we were seeing prices come down, and the first warning came on October 9th. That was basically the Nasdaq gave a signal at 3,080, almost 250 points ago, that the very day the market dropped and went down. Next day, October 10th, the Dow capitulated and gave an exit signal at 13,367. That was 800 points ago. Now we're looking at the S&P 500. That kicked in a little later on the 12th of October at 1,430.53. That was 75 points ago. The point I'm making is not to tell you how great our signals are, which they are great, but it's to tell you that the market anticipates these signals before the events before they happen. So the fiscal cliff was well modeled into our portfolios in terms of exit signals, which means get on the sidelines in cash. That's very, very cool. Now, we're going to be talking about some stocks today. Stocks to look at: Costco, Starwood Hotels, Merck and Riverbed Technologies, and Alcoa, all of which you should be out of today. Should not hang around for those. So let's go to the charts and the markets and our trade triangles. And let's go to our portfolio. And let's just freshen this up. So the big news is that all of our indicators now for the starting, you can see the first three there, minus 100, minus 100, minus 100. S&P 500, negative now, negative. And these are significant. Two things you want to look at. We're very close to a 61.8% correction. I'll put this into 6 months so we get a bigger picture. A 61.8% correction in this market from the lows that we've seen. Let's go a little further year to date. So there's the low back here in June. So we've pulled back 61.8%. Now this is a natural area where the market should be finding support around the 1346 area. We may bounce around here. We're very oversold, obviously, but the reality is the markets are not acting well. They're going to become more and more obsessive. And I'm not just sure that the politicians can do what they say they're going to do. They haven't done it in Europe for 2 years, so I don't think they're going to do it here in the U.S. anytime soon. I think we've got a very, very lame duck president. We've got all kinds of problems, and I don't see anything happening that's positive. So we're seeing the market reflect that. And just to put this in perspective, I'll put this much closer, 6 months, and I'll put our weeklies in. And you can see our weeklies kicked in right here on the Nasdaq on the 12th of October. So here we are. We're we're down the pike over we're the 15th today. So it's well over a month ago. We were signaling that markets aren't looking good. Of course, we had a little bit of a rally after that, but look what's happened since then. Nonetheless, we are in a downtrend, and there's nothing to say that won't continue. So moving along to the Dow, which we look at every day, of course, you can see the Dow kicked in. We had a signal at the Dow right here, which we talked about on the 10th of October at 13,367. And you can see how this market just sort of evaporated since then. And again, this has gone down further than this 61.8%. I would just put this in here, and let's just take a look. Yeah, it's gone beyond that reach. So it tells you this market's really in serious trouble, and it's not going to turn around anytime soon. So moving around to the Nasdaq, which has really been under pressure because of Apple. That was the big one that fell apart. And we're getting very close to, if we put the Fibonacci retracements in here again, you'll see that we're way beyond the 61.8% retracement. And we're actually we'll be testing the June lows, which is around the 2,700 level. So here we are. We are going to be trading now for the next 6 weeks approximately to the end of the year. And the question is, if we just go for the year, this market is practically, if we get back to these levels here around the 2600 level, 2650, so another 200 points lower on this Nasdaq, and we're unchanged for the year. And this is the big one to look at, and this is where technical analysis is so powerful. So if we clean everything off the screen, let me just take that this off and scope this out just a little bit more. Here's the thing that I would be looking at, and I'm just going to put a line chart on here, and let's take these monthlies off here. So here's what I would look at. I'll take the parabolic and the Donchian trade channels off. So very simple picture, very, very simple picture. So if we look at this market and we say to ourselves, okay, potential top, double top here, pivot point. This is incredibly important, this level. We just mentioned the level a few minutes ago. So if we move from here, which is, we'll call this 2750, just for discussion's sake, and we'll call this 3100. We'll just round that off to 3100. So you could say 250, 350, 350 from here. So we subtract 350. That takes us down to 2400, which takes us all the way back down to these levels. Now 2400, if we scope this out, let's clear that screen off a little bit further, and we scope this out to a bigger picture. Let's go to 5 years. 2400 takes you back to this level here. So that's not such a bad thing, but certainly it would not be a great thing either, and actually put the market lower for the year, which is definitely something you should be aware of. Also, if you've not seen our 100 years of capitalism, how capitalism really works, you'll know this markets are going to be difficult for the next several years, certainly not in any bull markets. So moving along to our next market, that's the Eurodollar. Excuse me. The Eurodollar is trading at 127.81. It's come up from the lows. Let's just put this, get this closer in and get what we normally look at, and some tools on here. We're going to put the daily, take the parabolic off. On chart studies, we're going to put the Donchian trade channels, which we like to look at, and also the parabolic. And you can see, one, the parabolic is being hit, so we're going to see this market move higher. But we're also looking at this market. The high today was 128, which we've been talking about as a resistance level for this market, and it may go a little higher, may go to the midpoint of the Donchian trade channel, which I would say comes in around about the 2850, 70 area, somewhere like that. But normally you would expect it to see, let me get my trend tool in here. You normally get to see, if this is this would go across here, and that would become resistance. So that's what we're looking at. Potentially, we should say the 128 level should actually hold this rally, because we are targeting the 125 level on the downside. So again, the trend longer term, if we put on monthly trade triangles, is still positive, believe it or not, for the euro, which is hard to believe considering all the problems they have over there. But it's still hanging in there. Only the weekly is negative, giving you the trading range. So I think expect we'll stay in a trading range here for a little while longer. So let's go on to our next market. This is crude oil. Now, just before I came on the air today, I saw that the two rockets had hit Tel Aviv, and not a good sign. The markets are really kind of basing out here, and haven't acted as well as I thought they would act based on some of the Mideast problems. So it's a conundrum between the fiscal cliff, the economy, and the Middle East. So let's see how that plays out. But generally speaking, it's in a trading range. You can see only our daily are positive. The monthlies and the weeklies are sideways, and it's just sort of going sideways. There you go. So nothing much happening there. We've hit the midpoint of the Donchian trade channel. In fact, let me just get this to 3 months so you get a better idea. So we just hit the midpoint like we did here. So we may see another test of the lows, but there's good support at 84 on this market. So moving along, the gold market traded down to a 1705 level today. That's where the market should find support. It did. It's come back up. It's still lower for the day and for the week. We closed at 1730 last Friday. So I think we need to do a little bit more consolidation before we'll see this market go higher. And I think we will see it go higher because the longer term trade triangle on the monthlies still remains positive, and gold has closed for the last 12 years higher for the year. Now, it is going to be higher for the year anyway, but nonetheless, it would appear that we may see some more movement on the upside in this market. So moving along to copper. Copper seems to be trying to base out here. It'll come up in just a second. Our long-term trade triangle is still very positive on this market. And let's see, here we are. So we're seeing the long-term and a short-term positive. Only the intermediate term is negative. So you see how we sort of based out here in this market, sort of just beginning to base out. So we need to see a little bit more of that before we can get too excited. But this is the key level for us, this intermediate term trend. Once that turns green, it would have to go over right now, probably over the 355 level to really get some upward momentum. And we're currently trading at 346. So I don't think that's going to happen anytime soon. So let's just clear the screen, go to our next market. Now, the next market we'll be looking at is going to be silver. And silver is actually acting pretty well. It was high a little while ago. It's about flat for the week, so not much going on there. But again, it's a little bit of a divergence here and a little of a doji line here. So you've got something here at the top of the downtrend trade channel. It's just turned up. We do have all of our trade triangles, however, positive, which means we should be seeing this market go higher once it perhaps consolidates over this level. And in regards to the wild card, which is the Middle East, it could happen tomorrow, it could happen next week. So really pay close attention to that area. So again, all of our trade triangles are positive. You want to be positive on silver. Okay, moving along to stocks. Costco gave a signal today to be out of this market. It occurred at 93.84. It's 95.25, a little bit higher. Nonetheless, this is an important signal. You don't want to ignore that signal. So out of Costco. Starwood Hotels, symbol HOT, same there. Boom, signal today, 50.47. It's currently trading at 50.32. Again, that's a negative signal for Starwood. That's not a good sign. And if you scope that out even further, you'll see we've been down to as low as 48. So we may see some more pressure on this market. Do you see how this market is just sort of building this, has built this sort of top to move lower? That's the one thing I really want to just bring to your attention. And the fact that we're taking out these lows here is not a good sign, indicating we could see down to 48 pretty quickly. So again, not a positive sign for Starwood Hotels. So clearing the screen and going to our next market. And that's Merck, the pharmaceutical company. This is not another good sign for Merck. You can see we've traded down to as low today as 42.55. The lows back here were 42.98, right around 42.33. So again, these are very close to the lows that we saw back here in late August. I don't think this is a buy. I think the markets are telling you they're really, really weak. And if we put our weeklies in, you can see we got out of this market much higher from where we purchased it right here. So again, this is something that you really want to look at. So again, we're out at 45, 44. It's currently trading at 42.76. So be careful with that one. Now these are all negative signs for the stocks, and again, many of these signals occurred today, which is his Riverbed Technologies, 1702. It's currently trading at 16.97. Not much of a move from there, but nonetheless still a negative for this market. And if you scope this out further, you can see this market has been at times substantially higher, up to 42, and now we're trading at 16. So we could well go back to this low that was seen here around the 14 level in this market, but you should not be long Riverbed Technologies. Lastly, Alcoa, big one, negative sign there, 810 be negative. It's currently trading at 805, and you can see this market's been all the way up to 18. If we scope even further out, you'll see it's been even higher than that, up to the 40, 45 level, and it's just steadily eroding on the downside. So again, if we just put our monthlies in there, you see they don't occur that often. I'll just sketch this in so you'll see where they occur quite easily. So here's a monthly right here. Several months later, it kicks in there. there, 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 and there. So this is going all the way back to 2008. So you can see for 4 years you don't get that many buy signals or sell signals. In fact, you've had 1, 2, 3, 4. Almost like one a year. So again, you don't get that many. When they do occur, it's usually a good sign the market is heading down. So it's a bad sign if you're long the stock, but the market's telling you right now you should not be long the stock. So we've covered a lot of stocks. We've covered a lot of things in MarketClub. I really appreciate you taking the time to watch these videos that I produce for you. And I wish you every success in trading. I'll be back tomorrow, same time, same place, and we'll be looking at the stocks and how we're going to close for the week. So have a great trading day.